Wealthy morning.
Good morning.
All right, give it a few more minutes to allow everybody else to jump on. Give it a few more minutes. All right, give it a few more minutes. Allow other people to jump in, and we'll get started. All right. Everybody had a late start this morning, so I'm gonna give it one more minute and we can get started. I got a few people that's jumping on right now. Give me a second, team. All right, team. I don't think anybody else is jumping on right now. Let's go ahead and get started. First and foremost, wealthy Saturday. How's everybody doing this Saturday? Can
Moving a
everyone hear
little
me?
slow, but okay.
All right, nice, nice. All right, so this is a two-part class. This class is charting 101 and also thinking of a master plan going into portfolio building next Saturday. All right. So in this class, it's going to explain how charts work in the crypto futures mastery class, right? It's all about charting, all about how the crypto futures market actually runs. Now, when it comes down to trading futures, we know that this market is unlike any other market we've ever traded. All right. It's not like the Forex market. It's not like the stock market, traditional stock market or options market. It's not like the traditional futures markets. This market runs on a completely different accord. It's a lot faster. It's a lot more in tech. All right. So mastering the art of pattern reading recognition is pivotal when it comes down to trading crypto futures. Now, what you'll master in these six powerful modules is first chart pattern fundamentals, M patterns, which is one of the top patterns when it comes down to being able to recognize entries for different plays. W patterns are double bottoms, right? An M pattern stands for double tops. A W pattern stands for double bottoms. Advanced level pattern readings, like different triangles, flags, wedges, complex formulations, a bunch of different things. All right, indicators, and we may even dive into a couple little bit live market executions when we come back next Saturday. Because this class kind of started a little late. All right. Now the introduction to chart pattern reading. Most people read straight off the fundamentals. They go and get a charting book and they read it straight off the fundamentals. That stuff works well when it comes down to stocks. Perfectly well when it comes down to stocks. Remember, the stock market, the Forex market, the traditional futures markets, those markets run a lot slower than the futures market. So price action movement is one of the key components for you to become a successful futures day trader, right? It's all about the patterns. It's all about the movement of the patterns. It's all about the speed of the market versus the analyticals that goes into other chart reading techniques. Make sense?
Yes.
All right. Now, understanding the fundamentals. What chart patterns reveal tell a lot about what's going on in the market, right? Tells a lot about the market structure. Price action trumps anything lagging in the market with indicators. Certain indicators move a lot faster than other indicators, right? Certain indicators can tell you give you more deeper, insightful look into the market versus other indicators. The psychology behind what drives pattern formations in the first place, right? What are the buyers thinking? What are the sellers thinking? How are the buyers moving in the markets? Are the buyers moving slower? Are the sellers moving faster? That's all those are different components that allow you to get a clear visual into what the market is potentially doing. My favorite pattern, let's talk about it. M patterns are double tops. So if you notice a lot of the times, well, I would say M patterns are my favorite. W patterns is definitely my second favorite. But you notice a lot of the times when we get into those longer plays, those plays that hit 1,000, 2,000, 3,000% gains, oftentimes we're catching that play at the top of the market, right? And riding that wave down, or we're catching that play at the bottom of the market and rallying that wave up. All right. M patterns are going to show you exactly what that movement looks like and how to play that move. All right. Now, the pattern anatomy is very, very basic. It literally looks like an M. All right. It also comes with confirmation signals on the top of the mark and actually on the bottom of the mark to show you exactly what happens. And it also has to come with a certain amount of risk management, because in order for you to be able to see exactly what to get in on the M pattern, you have to have that risk management, because those plays flip on you a lot, especially in the crypto futures markets. So let's look at a play. Give me 1 second, team. All right. Everybody see my screen?
Yes.
All right, cool. Get my handy dandy tool out. This right here is a formation of two different patterns. This right here is a W pattern, which we're getting ready to talk about right now in a second. All right, but if I scroll over, slide this down, and of course, erase this yellow line, you see multiple wet patterns, M patterns. M pattern means a double top, three-sided bottom. All right. This right here is also a M pattern. M pattern gives you what? Double tops, double bottoms, triple bottoms. Now, notice how this formates. We actually took off from this takeoff point here, rolled that market wave up, hit the top here, started to flow down to hit this bottom, just to ride back up to this wave, hit this top to ride down and actually bottom out at this point here. All right. Knowing how to recognize these patterns. Let me erase this. I know it's like a bunch of scribble scrabble, right? Like I'm in third grade. But knowing how to recognize these patterns will allow you to see where you can get into the market. Case in point, let me ask y'all a question. Get this stuff off first. All right. Let me ask y'all a question. Let's say we're charting the play, right? Now we see the clear M pattern. We see we actually bottom out here, right? We see we got to the top and it's showing a line of resistance here, right? So does not want to work for me today. All right, there we go. It's showing a line of resistance here, right? We hit this resistance point. There's a lot of uncertainty in this play right here, right? But we also know the last demand was where? Here, right? What do you think this play has the most likely point to actually reach back down to? That last point of demand, correct?
Yeah.
What meet your calls? What's up? It has the most highest possibility to get at least to this point here. So your goal is to try to anticipate the next run up because we know we are forming a clear a W pattern here. Your point is to see, okay, cool. This was the last point of demand here. And if you look straight across, it hits on this point 1, 2, 3, 4, 5, 6 times. 6 times it hit this demand line and started to rally back up. 6 times it hit this demand line before it actually made this parabolic move. So knowing that, the best possible position to get in would be to see if we can potentially try to catch it at the bottom at this demand line to make that move right back up. That makes sense?
Yep.
Yes.
All right. It's all about being able to read those patterns, see where those patterns lie, see exactly how to make that move. Because if you can see the pattern, you can see your profits.
So, can I ask a question?
Yes.
Okay. So you're seeing this like what's happened previously before you set up your play, right?
Mm-hmm.
Okay. So So at the moment you're at, when you're seeing this, the demand that you see here, that says that when I set up this play, then I need to set it up to start here and then, expect it to move up. You know what
So
I'm
here's the
saying? I'm
thing.
trying to,
Here's the thing.
okay.
This play right here, let me show you. This play right here doesn't exist yet. We see the clear move here.
Okay.
You see how that formed a V pattern,
Yeah.
which means this is most likely getting ready to form a W pattern. So we see the play here. This does not exist yet, but we
Okay.
know the last demand was where? Here.
Right.
This is where we put our entry play to be able to ride this wave up once it actually bottoms out at that resistance. Make sense?
Yes, yes. Now that I know where I'm coming in at. Yeah.
Yeah,
Okay.
yeah. So recognizing the start of those different patterns, the start of the M pattern, the start of the W pattern, can give you a more insightful look on where to put that play. Right? If I was going for M pattern, like here, which this right here is a clear M pattern. This is more of a W pattern here. This right here is definitely an M pattern. All right. M patterns, I'm looking for the top. I'm not even looking for the bottom on these plays. We know we took off here, right? We see we formulated here. We see we came down to this point. So this is what we consider the U pattern here. If I know we came down to this point, I'm waiting for the next ride. Our top resistance was here. Guess what? The top resistance on this M pattern is also where? Here. Now I know oftentimes we come down to the base of the candle, at the top of the candle. And this play, you probably would have took a loss if you would have came down to the base of the candle. But if I was to put the resistance line on here, I guarantee you that resistance line is right here, which sits right parallel to this resistance line. Meaning I will put my order here, parallel to this resistance line to get in to ride that market wave back down. That makes sense to y'all? Let me know if I'm speaking to the choir. It's making a lot more sense to y'all when it comes down to chart reading?
Yeah, I think so.
Yes.
All right. So recognizing those two pattern charts, those two chart patterns, is pivotal to where you can actually get into entry plays. This is how we make that 1,000% gains. Now, there are smaller plays. Like this is the day chart, right? There are smaller plays all in between these candlesticks. But the big boys, which is what we're here for, comes off of reading M and W patterns.
Okay.
Right,
So it's always better to plot your play at the top of the wick as opposed to, at that point where the candle is still strong at the top, because you said you probably lose if you didn't go all the way to the top.
The thing is, most plays don't have wicks that long being a resistance. So that's one of those, oh, I was gonna take a L on the play. You get what I'm saying? Yeah, I would, because most of the time we want to hit off the top of the candle. Notice how that other resistance had two candles and it hit off the top of both of those candles.
Right.
That's more of a that's a more practical. That was like this one right here. I'm gonna show you. This is a more practical resistance line versus this one. All right. So you really want to look for these. You would have took an L on this one, honestly. But you would have got right back in on this play and actually wrote the market wave down and actually made a profit. But that's why we use our supply and resistance lines to show us these type of moves. I don't have them on today because I don't want to cheat y'all out of charting. But y'all have them on y'all charts, right? Right?
Have what? Wait, say that again?
Supply and resistance.
Yes.
Our support and resistance.
Yeah.
Okay, cool. Yeah. If you don't, here's the list right here. Make sure you have support and resistance level with breaking your charts.
Yeah, I have all that.
Okay. All right. So recognizing that M pattern is highly important for you to move. All right. So we just went over W patterns, structure recognition, entry strategies, volume, right? Making sure you can actually see those double bottoms or those triple tops versus the triple bottoms on the M pattern, right? Recognizing those ways allows you to see, I have a more insightful look into the market. Now, ascending triangles is another way you really dive into the market, right? Notice how these plays it's almost like a stepping stone. Double tops before the fall. Double tops before the fall. So I can get my tool back up. Give me a second, team. There we go. Double tops before each fall. double tops before each fall. This is called an ascending triangle pattern. This is when the market is in a straight uptrend and it's showing the pattern going up, falling temporarily, hitting what we consider a consolidation zone, and then going right back up. Right now, this is more consistent with day trading or even scalping the market. All right. Now, with a play like this, honestly, your best bet is to try to get in at the bottom because riding this wave right here, if you don't know what you're doing, you can get your ass kicked. Point blank, period. All right. Getting in at the bottom and riding this wave up through the ascending triangle is the best possible way for you to play this play. But if you can't get in on that play, you can't get in at that bottom, try to get in on the consolidation period and ride that market way back up. But know that the market is going to be doing the double tops, consolidation. Every single time it hits a step, 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 all the way to the top step before the market starts to tank back down. All right. Now, a descending pattern is when we just went over an ascending triangle, right? And we start to do that same movement down, double down, a double top, down. All right. That means that the market is testing itself. It's still at a complete uptrend, but the market is getting ready to flip for a nice downtrend. It's getting ready to flip over to the next side of the market. It's getting ready to start flowing down. All right. Now, we also have what's called a bull and bear flag. This is when we have ascending triangles before a nice drop in the bearish market and then the ascending triangle right back up. These are all patterns for when the market is flowing on a long play versus the market shorting for a small play. Right. Now, this is the one you probably see the most often, right? The head and shoulders, right? This is when we make a mountain. I call this a mountain peak type of move. Now, these patterns here are great depending where you get on, where you get in, right? All right. So this pattern right here is great if you get in at the bottom, ride the market wave all the way up to the top, and then the market flips and go right back down. Now, everybody in here is a BBA member or MMG member. We talk about new drops in the market all the time, right? Cryptocurrency that drop, our futures plays that drop in the futures markets all the time, right? This is what happens every single morning when a play drops, when a play drops on an exchange. There's an initial run up. There's an initial run up, and then the market tanks. How many times have y'all seen that?
Too many.
All right. It happens. But what do I tell you to do the next day? The next day, we retrace. The support comes right back in, and the market tanks back off again. Every single time. How many times have we seen that happen in a BBA?
Yeah, I've seen it.
All right. So if you can't ride the market wave down when that drop happens, don't worry about it. Wait till the next morning, get in on that bottom, where the support is, and ride that market wave back up. It happens every single day. Every single day. Are y'all taking pictures of these, or y'all want to record them?
I'm gonna get the recording, hopefully.
All right, cool, I got you.
What trips me out is like where you come in at, because if you're saying if I come in to like where it's going down, maybe I should just leave it alone and just wait.
Yeah, absolutely. Leave it alone. Do not try to jump in. You're gonna get your ass handed to you. No,
Man, so
leave it
many
alone.
times. Yeah. But I should see the same pattern on the day before, right? So I'll know that, okay, it's going down now. So I should just leave it alone and then set up the chart to hit it, to catch it when it gets to the low point based on what I saw the day before, right? Does that make
Mhm.
sense?
It makes a lot of sense, but it literally happens every single day. So oftentimes the best thing you can do is nothing. Right? Hold your funds. Don't dive
Mm,
into anything. Don't do it.
okay.
Right? I know it's hard for a lot of people. I want to get it. Sit your ass down.
Yes.
Don't
It's
do it.
very, very hard.
Yeah, sit down. I got you. All right. Now, giving y'all a clearer understanding of chart reading?
For me, yes, because these are the problems that I have. I'm getting burned because I don't a lot of times I don't know when to come out, and then I'm trying to determine when to go in, and I probably need to wait.
Yeah, I mean, oftentimes, honestly, waiting is the best thing you can do because you see the market clearer. Sometimes it's better just to sit back and watch the market. Oftentimes, it's better to sit back and watch the market and use alerts.
Mhm.
And the alert will let you know whether you were right or not on that play, which is exactly what your homework is before next week, before we dive back in next week. Just sit down and wait.
So one thing I started doing, I think in the past couple of weeks, is looking at it and marking it up and just drawing like on my chart where I think it's gonna go. So then when I come back, I can see if they actually did that or not, versus just jumping.
I can barely hear you.
Okay, is that better?
Yes.
Okay. So I was saying last week what I did is like if you put a play in there and I know I had already missed it, I would just kind of mark it up where I think it was gonna go and just come back and check and see did it actually go in that direction or not.
That's absolutely right. Dude, that's called just testing the market, testing the chart. Oftentimes, kind of back testing it. Um, and this is what I do for fun. Y'all can laugh at me if y'all want. I don't watch TV. I don't do anything. If I'm out of the country, that's when I have my fun. When I'm in the country, I'm working. But I like to just set alerts just to see how right I am. That sounds a little arrogant, but I like to set alerts just to see how right I am. Watch the market and just set alerts. Even if I have trades in, I would set alerts on other trades. And oftentimes, it's how I bring y'all trades. I would set alerts and say, okay, cool. Pinpoint and write down. I write down every single trade I get into. I write it down old school and see if it hit that mark and start to rally up. Even if I didn't make a profit from it because I didn't get in it, I know I was right. And that helps you have a faster reaction time to trades.
Mhm.
So for my pastime, what I do for fun is sit there and literally get into trade. I mean, get into interest, put interest in, analyze the market, see if I'm right, see if I'm wrong, and jotting that down. Having a spreadsheet, jot it down and say, okay, cool. This is the play I did. This is the pattern this play is moving. And once you do that enough, you'll be able to really, really, really kind of pinpoint certain trades. You'll notice the XRP runs certain ways. XLM runs certain ways. Cardano runs certain ways. Sky AI runs certain ways. And once you learn the pattern of that particular chart, oh, you start printing money like crazy.
So where do you put your alerts? So like at the low point and the high point? Where do you
Low
put those
points, high
alerts?
points. Absolutely. I'll give you an example. All right. Let's say, let's go to it right here. Bitcoin is actually tanking. It's actually rallying back up right now. I want to go to the 2 hour chart. Let's say Bitcoin right now is at a short, right? And I see Bitcoin tanking down to this last demand here. I will put an alert here. At 89, 807.26, just to see if Bitcoin tests this support. Now, if Bitcoin tests this support and starts to rally back up, I know the market is going up. But notice this same point, the same alert sits right here at the last point of support before Bitcoin did this move here. So what do you think is going to happen? Or what do you think has the highest potential of happening when Bitcoin hits this demand line again?
It makes the same move as it did before. It goes up,
It's
right?
gonna make that same move probably 9 times out of 10. It's gonna make that same move. But you put that alert in here to pinpoint that upper movement. If we hit that
Do you
alert,
go in at that point? Do you
go
go
in at
into
that
the
point.
play?
You can go in. Certain alerts will damn near make you get to the place to where you can put market orders in. So start utilizing your alerts. It's not always about getting into an entry. Sometimes it's about scanning and analyzing the entire market.
So how do you know where to put your stop loss?
So with stop loss, I like to use percentages just because it's a lot easier, especially when teaching. Me personally, I'm looking at the stop loss being at the bottom of this mark here, right? We are 89, 87. I will probably go down to the last previous demand line, which is here before we rallied up for a stop loss or a potential stop loss down here around 87.
Yes.
I don't want to get down. I don't want to get that this far. So I'll probably get, especially testing it out, probably low 89, 88 mark. All right. Bottom level test, 87. I know it looks like a long drop. It's not that big.
Yes.
It's probably a 20.
I think about
26%.
leverage now. I'm thinking about leverage now.
Oh yeah, absolutely. Listen, if you got 50x leverage, then your stop loss gonna be up here somewhere, right? But nah, with a 17, 21x leverage, this is a practical stop loss. All right, make sense to you?
Yeah.
Okay. All right. You also have wedges. I love wedges. Wedges are another form of M pattern. It's basically showing you where the wedge of the markets are. All right. Conveying the markets, showing this M pattern or the top, bottoms of the markets. All right. Rounding formations. Right. You see where the market kind of rounds versus going in straight triangle lines. Right. This is what I like to call a wave pattern. Notice how it's going in a wave. This is one of the reasons we use the optimized trend tracker. When we see that trend flow going through your charts, that blue line going through your charts, it's the same wave. Combining patterns, the EAM, right? I mean, I'm sorry, the EAA, EMA, right? The RSI, the stochastic, right? We know all about the stochastic. Shows you the highs and lows of the markets. The volume, when we use our TTM squeeze, our trend flow, right? And the momentum indicators, like the stochastic, like the MD, like the MACD. Those are all indicators that we use to show us the different pattern movements or the combination of patterns in the markets. We use multiple different indicators to give us a multiple different views of the market, right? Multiple different views of the markets. That's why we use multiple different indicators. Like right now, I have the OTT on, I have the RSI, I also have the MACD on. These are all the indicators you definitely should have in your bag.
Yes.
Everything but the Fibonacci. Fibonacci's are, it's okay. It's more so for Forex trading.
Mm-hmm.
This is what I just got finished talking about. Chart analysis assignments. All right. This week, I want everybody to practice on this. All right. We didn't have a lot of people sign up for this class at all. And 3 people who were supposed to get in the class, they actually didn't show up. But I shouldn't have recordings. But this week, I want you guys to take a screenshot of your entire chart. And I want you to use your tools, use your pencil tools to find 5 patterns, 5 M patterns and 5 W patterns in the markets. Okay. And I want you to send screenshots of those patterns. That's our homework assignment for this week. All right. Always have a trading plan. and always document everything you do with the trading plan. Like I said, I'm old school. You don't have to be as old as me, right? In the market. I like to write down everything because it's something about having a pencil or a pen to paper. It just helps me keep it in my psyche, right? I can remember it better if I wrote it down, right? Versus typing it out. If you need to type it out, type it out. Have a notebook, have a notepad on your PC. With whatever you can do that's going to help you document your work, because once you have your work documented, you can always go back and look at that work. You can always go back and see that work. You can always go back and scan that work. And also use those indicators. I mean, use those alerts. All right. So live charting. You know, we get into live charting every day. We do this in the BBA. We get into live charting all the time. So when we come back next week, we're going to be doing a live charting session directly on. We kind of did one today. I did a couple today, but doing a live charting session with the trades going into the thinking of the master plan portion of this class. All right. This is the way your live trade simulation should look. This is the scenario. This is the way you should look at the market every single time you look at the market. Not just going off of trades that you see other people doing, not just going off of the entry points that we post in the Blockchain Bro Academy or in the MMG. Always go by this design. The first thing you do is pre-market analysis, point blank period. Scan the market, find the trade. Even if you get a trade from the Blockchain Bureau Academy, get that trade and do that pre-market analysis. Do that market analysis. Make sure you look at that trade for yourself. Don't just trust my words. Don't just trust Ken's words. Don't just trust any other coach's words. Look at it for yourself. Because oftentimes, a lot of people get their butts handed to them because they get into a play extremely late. All right.
So this is like the daily process, right?
This is a daily process. Absolutely.
See, that's what I need. I need a process. My mind is all over the place with this stuff. Okay.
This is a daily process. All right. Second thing,
Okay,
pattern development. Research the pattern. Look at the pattern. Find the pattern. Entry execution. Now, this could be an alert set, or this could also be you getting into a live play. All right. Trade management. This is something that a lot of people struggle with. If you have a live trade in the market, you just can't set it and forget it. All right. Don't set it and forget it. I don't care if it's a swing trade, a day trade, and for God's sakes, never set and forget a scalp trade. Quickest way to liquidation. Always make sure you have trade management. Now, me personally, I'm always in the market because I'm either teaching the market, or I'm studying the market, or I'm trading the market. So I look at the market all day, every day. Most people don't have that luxury, right? You need to set aside a time every hour, whether it's 15 minutes on the hour, 30 minutes on the hour, every hour, to look at your trade. I don't care if you're at work, wherever you have a trade in, you need to be able to at least scan and put your eyes on that trade at least once an hour. I would say 2 to 3 times an hour at best, at the most.
See, Cliff, this is how I get burned. Just what you're saying right now, because you be working and then you do need to go back and look. I'm doing something, I forget to go back and look, and then I look and it's the play is gone because I've just gotten liquidated. It's critical. So
well, the only time you can get liquidated if you don't have a stop loss in. So that brings to the next point: trade management, stop losses.
Yeah.
Stop loss. Stop loss is your best friend. Always utilize that stop loss. All right. Post-trade review. This is one thing that most people don't do. They make their money and go on about their life and be happy. No, you always want to analyze the entire trade. We got into over 3,000 trades in the Blockchain Bureau Academy last year in 2025. How many of those trades do you think I actually looked at? How many of those trades do you think I did this entire chart with? Every single one of them. I have to do this more so than you guys because I'm giving you trades. So I have to align everything because at that point, you're trusting me to make you money. And I hold myself at a high level of integrity because I want to make sure that you are getting everything that you need to be able to make a profit, not just throwing plays out there. So I have to look at this more so than most people. But if you align yourself with all of these steps, you can't go wrong in the market. Are you going to lose money? Absolutely. You're going to get your ass handed to you sometimes. But guess what? Imagine how much more you're going to make by being able to follow a straight plan. Pre-market analysis. I'm looking at the market. I'm not just blindly trading. I'm looking at the market. I'm noticing the patterns of the market. Okay, cool. I have the execution. I'm executing that play. Okay, cool. Now I'm making sure this play is running on the right trajectory. And even when you make your profits or you take your losses, write down profits and losses on each side of the piece of paper. Okay, I lost because of this reason. You want to have a reason why you lost. You want to have a reason why you made that play work. This play worked for me because I did this. This play I lost money because I did this. This is a system of holding yourself accountable. Go ahead.
Okay, so I have a quick question. So when you give us a play and we don't have, and you said don't put in a take profit, right?
Mm-hmm.
So you have to be watching it to know when it starts to coming down, then that's when you're getting out of the play. So where do we go with that? When you give us a plan, you said don't put in a take profit. How do you know when to get out of the play?
You. That when I say don't put in, I say I never say don't put in a take profit. I say I'm not putting in a take profit.
Okay. Well, I'm going to do it the way you do it. So I probably wouldn't put in a take profit, but then I'm lost because I don't know when to get out of the play.
And only time I don't put in a take profit is if it's a play that's extremely risky that I see the high potential in. And I'm at that point, we're gambling the market because that's what those plays are. Those are gambles, point blank, period. Those 3,000, 4,000% gainers, those are gamble plays. So that's why we don't ever put as much money in those plays. But when it comes down to regular day trades, my take profit is at 20%. I take 20%, 20%, 20%, 20%, 20%. That's how you build your consistency in the market. Right? Swing trades. I don't put take profits on a lot of swing trades because we want that market to rally out. Like we see Bitcoin going down to at the very least, 74,000. And I hope it gets down to that point.
And you're going to ride it back up.
Right? You're going to ride that play right back up because they are already projecting to hit 180 by mid-February. So those plays, you don't want to put a take profit on a play like that because you're going to cut yourself short. All right. So those are the only times where I don't put a take profit on something. Anytime outside of that, I'm putting a take profit on it. Absolutely.
Okay.
All right. All right. So I will have a pattern playbook for you guys when we jump back on next week. All right. If you can't wait till next week, there are plenty of playbooks you can jump on directly on Audible and Amazon. They have tons. Trading for Dummies is great when it comes down to just reading patterns, but I have a futures day trading playbook pattern put together for you guys next week.
Cool.
All right. The psychology of trading. Y'all know this one already, right? Avoid the FOMO, right? Stop trading trends. Avoid the FOMO, all right? Notice we don't really push FOMO on the Blockchain Bro Academy. We don't push meme coins like that because people lose money with them. So avoid FOMO trading, all right? Position sizing discipline, all right? A lot of people undertrade. Right, I have a student right now who's an MMG member who's phenomenal, but he undertrades a lot. He's so afraid of he's so afraid of losing money. He only takes 8 to 9 to 10% gain. That's it. And I'm like, sometimes you're taking 8 to 9 or 5 or 6% gains, it's the penalty fee, or not even a penalty, but the fee is going to eat up at your profits, right? Try to push to get at least 12, 13, 14, 15% gains. All right. Push yourself. So you don't have to go for the gusto every time, but push yourself gradually. If you find yourself being able to consistently make 10%, start trying to make 12%. You find yourself making 12%, go up to 15%. Make it a gradual growth, not something that's exponentially big, just blows up in your face. Gradual growth is great. All right. This is what traders do. My top student right now makes $3,700 to $4,600 a day.
Wow.
And she makes that. She makes that trading. She doesn't get no more than 15 to 20% gains.
Mm.
And she started with $500. Yeah. So it's all about gradual growth. Gradual growth. She makes more money trading a day than I do, because I'm doing everything else. Right? Well, yeah. Right. Revenge trading. How many of y'all done that? Got your butt handed to you so much, you were like, you know what? I'm gonna keep on going at it. No, this is not a casino. I had a guy at a casino tell me one day, he said, listen, bro, he said, you got to keep losing to win. I said, that doesn't even make sense. But it makes a lot of sense now, right? Because those L's are lessons, and those lessons convert into blessings in trading, not gambling. So no revenge trading. You ain't going to get it back. The market is unforgiving. It's going to continue kicking your ass, point blank, period.
Mm-hmm.
All right. The best thing you can do is take a deep breath and sit down for a while and recalibrate your mind, and then get back into it. All right. Pattern quality standards. Make sure it's a clear pattern before you dive into that play. Always. All right. So always try to go for the biggest, more consistent wins versus everything else, right? Pattern recognition speed. I can recognize a pattern in 3 seconds. I don't expect y'all to do that. I've been doing this 15 plus years, right? So I can look at a pattern just like that and say, oh, that's an M pattern. Oh, that's a W pattern. Oh, that's a V pattern. That's a U pattern. Oh, that's a lateral line pattern. All right, that's a bullish and bearish segment pattern. That's a head and shoulders pattern. I can do that in 3 to 5 seconds, right? These are some goals you want to strive to get towards. All right. If you can't recognize it in 15 seconds, don't worry about it. If you can't recognize it in a minute, don't worry about it. The key to this is being able to view the market and study the market till you get to this point. All right. Your goal is to be at an 85% win to loss ratio. Right? 85%. Meaning you want 85% of your profit, 85% of your plays to be in a profitable state. This is BBA standards. Now, what is the national standard for trading? Can anybody take a wild guess? Win the loss ratio.
But like
for an investor to be successful.
60%.
60%. That's a good answer. Anybody else?
I was gonna say 3 to 5, like 3 to 5 ratio.
3 to 5. Okay. In order for you to be deemed a successful trader by investor standards, you have to have a 55 to 45% win loss ratio. Mm-hmm. So 5% over breaking even. In the BBA, we do 85%. We here to make money, not scam the market, like scheme over the market. No. All right. So this is your goals. 3 to 1 risk to reward ratio, right? Where you risk $1 to make $3. All right. This is the way our goal. This is our goals. All right. Mm-hmm. Always make sure you scan the market for at least 15 minutes. The first thing you do when you wake up in the morning, brush your teeth, scan the market. Truth be told, I'm looking at the market and looking at plays before I even get out of bed in the morning. I was up at 4 a.m. this morning. I did a video at 4:40. I actually woke up at 4:44, which is crazy. But 4:44 this morning, I got up and got into a play. I was up at 3 something, but I got up and got into a play. and posted that play. I'm not saying you should get up that time, but there are times in the market where the market runs a lot faster. Anytime between 4:30 a.m. and 7:30 a.m., the market is running fast. Anytime between 9:30 a.m., p.m. and 1 a.m., the market is running fast. All right. So I hope y'all enjoyed this class. What y'all think about the class? Does it give you a more insightful look into charting?
For me, yes, because I need a process. I need to understand what I need to do when I get up and start this process because I'm not winning and I'm too much in too many different places. I need to see a formatted process so at least I know where I am, you know?
Oh yeah.
So
This is
this
what
works for me.
absolutely. This is what I designed this class to do. I designed it to be like a step-by-step guide. A step-by-step guide into what charts to look at, what charts to read, how to analyze these charts, how to dive into the charts, what process most we do in the BBA. So this is based off of what I do personally.
Okay, cool.
All right. All right. We have any questions before we jump off?
Nope. Good.
All right. This is a stop guessing, stop gambling, and start reading charts like a professional. All right.
All
Let's
right.
get it, team. You have any
All
questions?
right.
Y'all hit me up. I'll see y'all next Saturday for the second portion of the Thinking of a Master Plan portfolio.
All right. Thank you.
Have a good day.
No problem. Y'all too. Peace.